Hey, what's going on, guys? Welcome to the video. I hope you guys are doing great today. Today's video is going to be called Best Tools for a Scalper, or the tools that I find most useful for a scalper. Basically, the tools that I use that I find give me an edge in the markets today. I'm a trader and I've been trading for about 2.5 years, pretty much full time. A lot of what you will hear me say in this video is information I've gained from experiences in the market and information I've gained from mentors and other traders who have years more experience than I do. I just wanted to make you aware of that because there's a lot of this predatory activity on the internet right now. I do not want you to think of this video as a marketing scheme. Even though I am an affiliate with one of these companies, I'm trying as hard as possible to show this stuff to you from an objective point of view and explain to you why I think it gives me an edge personally, and we'll take it from there. If you guys stick around to watch the entire video, there is going to be a secret surprise at some point in this video. So if you don't watch the whole video, unfortunately, there's a high probability you're gonna miss that surprise. Lastly, before we get the video started, there is one very important feature that is available in only one of these platforms. That feature, in my opinion, is a game-changing feature for people that trade in faster markets like crude oil or NASDAQ futures. And I'm going to show you what that feature is later in the video. So again, remember to smash like on the video and let's get to it. Here we go. I'll tell you what the tools are first, and then I'm going to go deeper into the nuances of each of these tools and how each of these little nuances helps you. Because from my perspective, a trader today needs to use all of the tools in his toolkit. It sounds kind of like Jerome Powell there, to get an edge in today's markets. You can have the best DOM, but if you're not seeing the larger context of what's going on, you're missing a big piece of the puzzle. The two tools that I'll be discussing in this video are as follows. The first one is the DOM, aka depth of market. That is the first tool that is necessary for traders who scalp positions short term, who buy the bid and sell the ask. And the second tool that I'll be talking about in today's video is a chart, but not a typical chart. I'll show you what kind of charts I look at. These are from Sierra charts. This is my charting layout. The one on the right is a footprint chart, and the one on the left is a range chart. And there is some very important information on these charts that contributes to the way I get an edge trading these markets personally. And again, I'm not going to explain to you every little nuance and how I combine it. So let's start off with the DOM. Okay, here's an example of what TT's platform looks like. You can see there's the DOM here, and you can see price, bids, offers. And I'm pretty sure that there would be a way to display the current traded contracts as well in this platform, although I have not used it myself. Guys, in this video, I'm simply explaining to you which tools I think are the most useful for a scalper. The bottom line here is that you're most probably going to be using one of those three platforms: Sierra charts, Jigsaw, or TT. There are other third-party options like Motive Wave and Bookmap. I have not seen them showing better depth of markets than the ones that I have seen in these platforms that I've already mentioned. Let's continue here to talk about the DOM. So what's the difference between a good DOM and a bad DOM? I'm going to go a little bit above the surface, and I'm going to anticipate that you already know what you're looking at on the screen. And if you don't know what you're looking at here, I want you to go watch two videos. The first one is by a guy named John Grady on YouTube. The YouTube channel is No BS Day Trading. There's a video called Basics of Order Flow. Go watch that video first, and then go watch Fat Cat, How to Read the DOM. Watch those two videos, then come back to here. You should know a little bit more about what you're seeing on this screen right here. I'll start off by saying the platform you're looking at here on the left is called Jigsaw Day Trader, and this DOM here next to it on the right side is a book trader from Interactive Brokers Trader Workstation. Now I will just show you the difference between the two simply first, and I will explain to you some of the information being displayed here on this DOM. So now I'll just pause the video right there. I will now begin to explain to you some of the information that you're seeing on the screen. So on this DOM, basically it starts from here and it ends over here. That's the DOM. This right here on this side, that's another DOM completely. for the micro contract because I trade on the micro contract while watching the E-mini contract. First of all, you're seeing the price of this instrument, which is at this moment was 852.5. Next to it, you're seeing a couple of columns that are displaying limit orders to buy below the price. So these are limit buy orders right here. And above the current price, you're also seeing limit orders to sell right here. So that's what traders would call the level 2 data. So in this case, you're only seeing 10 levels of prices, limit orders to buy and limit orders to sell. Next to it, I would say are the two most important columns in this platform, Jigsaw. And these two columns right here contribute to why Jigsaw is one of the best DOMs that is available to individual traders, and that is the current trades columns. First of all, you're seeing the bid-ask spreads. You see these two white outlines. Basically, those are following the price of the highest bidder and the price of the lowest seller. So you're constantly seeing this bid and ask spread moving around all day. And again, I am displaying this information the way I found it to be useful to me. A lot of other traders display this information slightly differently. My personal preference, I really enjoy highlighting the bid and ask spread of the market and watching how that trades. So basically, what you're seeing print in these columns right here, the current trades on the bid and current trades on the ask, is essentially the same trades that are hitting the time and sales. Watch it yourself. Watch the time and sales. All of these trades taking place are the same trades being displayed in these current trade columns. And of course, when the market comes back to trade old prices, those current trades get replaced with the new trading activity, and that's a setting you can change yourself in the platform. This is my DOM setup, and I would not be able to trade using another. In Sierra charts, you can do it. You can display the data exactly like this. Watch depth of market comparisons on Sierra charts, and you will notice one thing. The updating speed of the DOM in Sierra charts is quite slow. Let this video play a little bit. You're going to see the market continue to trade, and the way I have it set up is that after a few seconds, the previous trading that occurred at prices will disappear and be replaced with new trading that occurs. So if you see the market continue to move up or down, so let's watch, and you can see the market tries to go lower there and then rebids this 57. Now let's just watch this for a second here, and you're going to see, and basically you can see how these numbers are filling in. So there we go. We moved to a lower price, traded some contracts there, and now the bids are lifting back to this 54 area. We're trading an offer at 56. And you can see how these numbers are filling up. And we are currently watching the live trading of this market. So there the market sweeps down, and we see that a large bid of about 160 contracts was filled right there. Now, I don't know about you, but if you did not have these columns displayed here, I don't think there's any other way that you would have been able to see that large bid get filled right there unless you were looking at the time and sales on a super slow motion movement. So watch the time and sales and tell me if you can see that bid getting filled. You might see the bid appear there. There you go. See the bid appear there. Now watch the time and sales. It fills in a millisecond, right? You can't follow that. If you didn't have this current trade column, you would have not have seen if that order traded completely or not. In fact, you would not have been sure if the order was pulled or not. But because of these current trade columns, you can actually see that the order was traded completely. Just to make this nice and simple, the difference between this DOM and most other DOMs is that you can't actually display these current traded contracts. So on the right side here now, this is a DOM or book trader from Interactive Brokers TWS. In this platform right here, you're seeing the price in the middle, the orders to buy, orders to sell above the price, but you're not seeing the current trades like I'm able to display in Jigsaw. We are seeing the volume histogram. And since this is an option that is not trading, thousands of contracts every minute, the volume will be a lot lower. It will be easier to follow larger option transactions using a book trader like this. And for an option trade, for example, this actually would be perfectly fine. But I do believe if you're tracking an underlying security or a futures contract, being able to see the current traded contracts at each price in real time presents a lot of very important insight. I'm going to leave it there for now. And if you guys have any questions about that, you leave them in the comment section below. All right, guys. So for now, we're going to move away from the DOM and we're going to move towards the next tool in this video, which I think is one of the best tools, if not essential for all traders, which is these types of charts in Sierra charts. primarily a footprint chart. Basically what it is it's a way to segment volume at price data into smaller time frames. So for example, this is the volume histogram or volume profile in Jigsaw. This profile here is displaying the entire volume traded at each price for the session. What a footprint is exactly this, except that now the data is being segmented into smaller time frames. They can either be time-based rotations, so each one of these bars represents 10 minutes of time, or you can also display these in terms of ranges, and we'll get to that in a second when I talk to you about my range chart here on the left. So essentially, I think I've covered it, which is that the point of a footprint chart is to display volume at price on a more immediate term basis. You're getting a lot more clarity from a shorter term footprint than you are from the larger term session profile. Because for example, let's say the market auctioned in these price ranges all day long, and then we moved away from it. And now later in the day, we're moving back into that range that auctioned a lot of prices. If you don't have some means to display the shorter term volume at price, meaning the footprint of the last 10, 20, 30 minutes, then you're not exactly seeing where the market is now perceiving fair value. And what I mean by that is the prices that are trading the highest volume. So that is what I use the footprints for. So in this case, you can see here, this is a 10-minute bar and it opened at this price, traded higher, and then it came down and closed at this price. A candlestick trader would not be seeing what has been going on inside of this bar. That is why footprints are so important. You can see that the highest volume price on this bar was right around this 852 zone. Traders need to understand where fair value is if they plan to make good trading decisions. The next chart here is a range chart. On this chart, I'm displaying ranges of 20 ticks. So whenever the market moves up or down 20 ticks, it will create a new bar. That's what a range bar is. More importantly, in Sierra charts, I'm able to display these numbers right here, which is the delta of the immediate rotation of the market. Another way to explain that is it's the difference between trades that occurred on the bid and trades that occurred on the ask. For example, if there were 100 more trades on the ask than there were on the bid, then the delta figure would be plus 100. These numbers are a very important nuance for shorter term traders because they help you gauge the strength of a move and if the price is moving on large amounts of orders hitting the ask or orders hitting the bid. And again, guys, I'm scratching the surface when it comes to how you use this data, but I'm basically explaining to you that this is the data I'm looking at. If I had to be a little bit more specific with you now, the reason why I switched over to Sierra charts to use these types of charts is because the footprints are very good. So in this case, just a simple example, you can see at this price, 852, this was a price that had majority buyers trading into that price. It was also a high volume area. The next important game-changing feature for the charts is the ability to display delta pullbacks from the highest point of the bar and delta pullback from the lowest point of the bar. So these delta figures here are displaying the difference between bid and ask volume since the most recent lowest tick of the bar, and for this one, since the most highest tick of the bar. It's a very intuitive way of displaying the delta in Sierra charts. And of course, the last thing is showing the delta on my range chart. For example, you can see here the market moved up on a strong rotation up on a positive 463. So that's what we consider an imbalance higher. So if the market is an imbalancing higher, you should not look to sell. Now, what we saw in this case is that the market was unable to find value in these prices, and we proceeded to imbalance lower fairly quickly. So we call this somewhat of a failed auction higher. And in this case, we imbalanced back down on a minus 396 and then again on a minus 447, except this time a lot of this 447 was done in this range, and you can see the price did not move a lot. You can say, generally speaking, that a lot of these sell orders on the bid were potentially being absorbed by a passive buyer here, and you can see that the market then exploded higher on a positive 335 and balance higher. So these delta figures, guys, they help me to filter out which side of the market is in control of the immediate price action. That's it. Okay, guys, we're getting towards the end of the video here. I want to now show you the one feature in the platform day trader that I think is game changing for people that trade in faster markets, crude oil or NASDAQ futures, especially when the market is experiencing high volatility. I will show you what this feature is right now. So normally short-term traders, when they put on a trade, they have an attached stop and they probably have an attached limit order to take some profit. Now, normally when the market moves in your favor on most platforms, you need to click on your order and drag it up. There's no actual way to bring your order to a price immediately, and in Jigsaw, there's a way to do this. So watch this trade right here. Watch the trade. Let's watch this trade right here. I click on the price at 65.25 and I'm immediately in the green on this trade. Now watch how quickly it shoots in my favor. All right, you see where my stop is, right? It got trailed automatically because I have an auto trail on it. However, there is one feature in Jigsaw that allows you to trail your stop simply by clicking on the price. So when I click on the price right here at 874.50, what's going to happen is that this stop order all the way down here is going to be moved all the way up here in one click. Watch. I clicked and I got out and I got filled at 74.25. That is the feature I'm talking about, guys. It's the feature that allows you to move either your stop order or your limit order closer to where the price is. So in the case of a long trade like this, if I click anywhere below the price, it will automatically bring my stop to that price. Likewise, if I click anywhere above where the price is, it will bring my limit profit taker to the price that I clicked on. For example, right now, if I clicked on 872.50, it would bring my limit profit taker order to that price of 872.50. And let's look at this trade one more time. Look at how quickly the trade was in profit. When you get a trade that is in profit this fast, it just seems like a no-brainer to trail your stop right away. So I was able to trail it in that moment and get paid on that one contract. And in faster market conditions, that feature is game-changing. End of story. Does Sierra Chart have that feature? No, it does not. Go look at TT's video tutorials. When they show you how to move a stop order or a limit order, they're showing you exactly how they do it in all other platforms, which is clicking on the order and dragging it up. But that takes too long because you have to click on the order and drag. If you're able to click on the price and your order appears at the price in an instant, that in itself is a huge edge. Because of that trail stop feature, the live trade license for $50 a month for me is 1000% worth it. And it's simply because of that feature, especially if you trade NQ or crude oil. All right, guys, so this video was all about the best tools for scalpers and basically tools that I use to get an edge currently. I didn't really explain to you how I use them. If you want to know more, send me an email. If you learned something from this video, that's great. Remember to take everything you hear on YouTube with a grain of salt, and I wish you guys all the best. See you in the next video. Take care. Bye. Take care. Bye. Guys, I have a special announcement to make now. If you want to get $50 off any products from Jigsaw Trading, use my coupon code CVJigsaw in the description below. All right, guys, cheers. Let's go. Keep the video rolling.